Ever found yourself scrolling through endless car listings, the perfect ride shimmering on your screen, only to have the excitement deflate when you start thinking about financing? Yeah, that part. It can feel like navigating a maze, right? So, let's cut through some of that confusion and talk about a name you might have heard in the auto loan world, Ally. Now, Ally isn't your traditional brick-and-mortar bank. They've carved out a significant space, particularly in the realm of auto finance. But how exactly do they operate when it comes to getting you behind the wheel of that dream car? What makes their approach tick? That's precisely what we're going to dive into today. To understand Ally's role, it's helpful to zoom out for a second and look at the broader landscape of auto lending. Traditionally, you might walk into your local bank or credit union, sit down with a loan officer, and go through the application process. Dealerships also have finance departments that work with various lenders. Ally primarily operates through a different channel, partnerships with dealerships. Think of it this way: when you're at a car dealership and exploring financing options, the finance manager likely works with a network of lenders. Ally is often one of those key partners. They don't typically offer direct auto loans to consumers walking in off the street. Instead, they provide financing solutions through the dealership. So, when you're sitting in that finance office, and the paperwork mentions Ally, what's happening behind the scenes? The dealership's finance team is essentially acting as an intermediary, submitting your loan application and information to Ally, and potentially other lenders, to see who offers the most favorable terms for your situation. What are some of the things Ally considers when evaluating your loan application? Well, just like any other lender, they're looking at a few key factors to assess the risk involved in lending you money. First and foremost is your credit score. This 3-digit number is a snapshot of your creditworthiness, reflecting your history of repaying debts. A higher credit score generally indicates a lower risk for lenders, which can translate to better interest rates and loan terms. Ally, like most auto lenders, will have different credit score tiers, and the interest rates offered will vary depending on where you fall within those tiers. Next up is your credit history. This is the detailed record that backs up your credit score. Lenders like Ally will look at the length of your credit history, the types of credit accounts you have, credit cards, previous loans, etc., and your payment history. A consistent track record of on-time payments is a big plus. Any negative marks, like defaults or bankruptcies, can raise red flags. Another crucial element is your income and employment. Ally needs to be confident that you have the financial stability to repay the loan. They'll likely ask for proof of income, such as pay stubs or tax returns, and verify your employment status. A stable job and sufficient income relative to the loan amount are important factors in getting approved. The vehicle you're looking to finance also plays a role. The age, mileage, and overall value of the car can influence the loan terms. For instance, a brand new vehicle might qualify for better rates and longer terms compared to an older, higher mileage used car. Ally will consider the loan-to-value ratio, which compares the loan amount to the car's value. Finally, the down payment you're willing to make can significantly impact the loan. A larger down payment reduces the amount you need to borrow, which can lower your monthly payments and potentially the interest rate. It also demonstrates a greater financial commitment on your part. Now, let's talk about the specifics of what Ally might offer. While exact terms and rates will vary based on individual circumstances and the prevailing market conditions, Ally is known for offering a range of financing options. This can include new and used car loans. Whether you're buying fresh off the lot or opting for a pre-owned vehicle, Ally provides financing solutions. Lease options. For those who prefer lower monthly payments and the option to upgrade to a new car every few years, Ally offers lease agreements. Commercial vehicle financing. Ally also caters to businesses needing to finance vehicles for their operations. One area where Ally has gained attention is with its Ally Smart Lease. This lease program often includes features like multiple mileage options and the ability to transfer the lease to another qualified individual. It's designed to offer flexibility to lessees. Beyond the basic loan and lease products, Ally sometimes offers special financing programs or incentives, often in partnership with specific auto manufacturers. These might include low interest rates or deferred payment options for qualified buyers. It's always worth asking the dealership's finance manager about any such programs that might be available. It's also important to understand the interest rates associated with an Ally Auto loan. These rates are influenced by a multitude of factors, including your creditworthiness, the type of vehicle, the loan term, and the overall economic environment. Interest rates can be fixed, remaining the same throughout the loan term, or variable, fluctuating with market conditions, although variable rates are less common for auto loans. When you're presented with a loan offer from Ally, or any lender, pay close attention to the annual percentage rate, APR. The APR is the total cost of borrowing money, expressed as an annual rate. It includes not just the interest rate but also any other fees associated with the loan. Comparing APRs from different lenders is crucial to understanding the true cost of the loan. Loan terms, or the length of time you have to repay the loan, will also vary. Shorter loan terms typically mean higher monthly payments but lower total interest paid over the life of the loan. Longer loan terms result in lower monthly payments but can mean paying more interest in the long run. Ally offers a range of loan terms to fit different budgets and needs. Now, you might be wondering about the application process when Ally is involved. Since they work through dealerships, the application process will typically take place at the dealership's finance office. You'll likely need to provide personal information, including your social security number, address, employment details, and income information. The finance manager will then submit this information to Ally, and potentially other lenders, for review. Ally, like other lenders, will use automated underwriting systems to assess your creditworthiness and determine if you qualify for a loan and at what terms. This process can often be relatively quick, providing you with an answer within minutes in some cases. If your loan is approved through Ally, you'll receive a loan agreement outlining the terms, including the loan amount, interest rate, repayment schedule, and any fees. It's crucial to read this agreement carefully before signing to ensure you understand all the obligations. 1. eglatidlaloans.com. eglatidlaloans.com. What are some of the potential advantages of financing through Ally? Convenience. Applying for financing at the dealership can streamline the car buying process, allowing you to handle both the vehicle purchase and the financing in one place. With that said, thanks for watching and until next time.